Good morning, everyone, and welcome to the European crossover webinar. Bear with me. Let me go and turn this clock down a bit. Okay, and we've seen a pretty good rally in Asia that took the S&Ps back over 2,800. Yesterday we saw the S&Ps actually open strong in the Asian session on Sunday, and then quickly started selling off. And we were pressing those lows yesterday, and was looking for us to the market. We talked about in the chat room about a lot of confluence down there at 27.26 and 27.21, and looking for just a dip below 27.20 would offer pretty good area for a buy. And we did just that. We did dip, and we held, although the market certainly stayed or remained on the defensive for throughout the morning session, and it was just seemed like a very illiquid, maybe not illiquid, but certainly we saw the market kept kind of bouncing a little bit up, then fading, bounce a little bit up, fading. Later on in the day, we did see the market make a push higher. And then, of course, in Asia, we saw this push continue into the mid-80s, and then we saw this market continue to even make another push into 2790s, and later on we got above 2,800, and now we're holding in the 2780s, actually where we have, we'll take a look at the equities. Looks like I lost the 1 minute chart, but I'd rather lose the 1 minute than something else. But looking back, as I mentioned, over here on the 2-hour chart here, you see that dip here, and we did dip just below. We were talking about 27.13, a bit on a stretch, and we got there. I think the low might have been 27.11.5, and from there we continued to we continue most of the session kind of like a little bit of a back and forth. Later on in the session, we started seeing this market kind of move higher. But once we finally made this move almost all the way up to 28.09, we have a little bit of a graystone doji in the market sitting here, but certainly a push. And even here in the NASDAQ, you can see this push even above this key area, which was the 83.47 here. Key area for us to break above that, and maybe there might be a little bit of space right there between that and 88. But we even continued to push even further there. So it's quite a bit of a surprise that we pushed this far, but pushed nonetheless. I think people were scratching their head in Asia trying to figure out where there was. I mean, I think there was some positive Asian numbers, and I forgot there was something else. And also about Amazon hiring. I mean, people were trying to reach for anything to figure out why we saw this jump. But jump we did see nonetheless. Moving on. We are continuing to see crude oil continue to weaken. Look at this. No let up here. Now, this is on the May, which will probably soon be rolling into the June. But still, nonetheless, we still continue under pressure here in the crude. And also, look at gold. Still another high here in gold market. Of course, with all the liquidity that's been flooded in here, And also we've seen that run up in equities. It's certainly been open the door for gold to continue to move higher here. And looking into the data coming into today, we do have U.S. import prices at 8:30 Eastern. And that's it. That's it from what I see here until we get into some New Zealand and Australian data, Australian consumer sentiment. But just export prices here in 8:30 Eastern U.S. data. With that, we'll move into the news. Looking at the Canadian dollar at a 4-week high versus the U.S. dollar as oil output cut pact helps. The Canadian dollar rose to a 4-year high against the U.S. counterpart on Monday as oil prices edged higher after a landmark deal by OPEC and its allies to cut output. The Canadian dollar was at 38.70 to the greenback. The price of oil, or one of Canada's major exports, fluctuated on Monday as the positive impact of major producers agreeing on record global oil output cuts was offset by concerns that the reductions will not be sufficient to reduce a glut as the coronavirus outbreak hammers demand. OPEC and allies, led by Russia, agreed on Sunday to the output cut to prop up oil prices amid the COVID-19 pandemic, and they said they had an unprecedented deal with fellow oil nations, including the United States, to curb global oil supply by 20%. The measures to slow the spread of the coronavirus have destroyed demand for fuel and driven down prices, straining budgets of oil producers. Oil markets remain on volatile ground given the significant reduction in demand, said Joe Menimbo, senior market analyst at Western Union Business Solutions. Canada's main event risk arise with the panic of Canada decision Wednesday, central bank's assessment of the economy and their willingness to do more to support the growth will be of critical importance in shaping the loony sentiment, Menimbo said. And the dollar slips as Chinese trade brightens mood, and that was one of the things that kind of gave the futures a little bit of a boost. I'm talking about equity futures. The dollar slipped on Tuesday, and the Australian dollar led a rally in riskier currencies as China's trade data painted a less gloomy picture of the coronavirus impact fallout than markets had feared. China's March exports fell 6.6% from a year earlier, compared with the forecast for a 14% drop, and imports fell by less than 1% compared to a 9.5% drop anticipated by economists. Daily fatalities in the U.S. also fell sharply, and states began to reopen their economies. The Australian dollar rose to 64.32, and the New Zealand dollar firmed to 61.31. The market is front-running the idea that we're going to see the case account dissipate, said Chris Weston. The baton is now being firmly handed over to the reality of the situation in economic data, calling the Chinese figures way better than expected. The positive move was reflected in equity gains in Asia, yet trepidation kept a cap on further rises in currencies. Gold and safe havens of the Japanese yen and Swiss franc also rose in nod to the underlying caution. Can it last? The Australian dollar gained 17% from a 17-year low hit last month, and analysts are beginning to wonder if it has run out of puff or a global recession looms. The transitional drivers like commodity prices of the world economy are going to put downward pressure back on the Aussie, said Joe Capurso. So it's prepared for a fall. We think it'll oscillate around the 60 cent for the next couple of months. The Kiwi has climbed back 12% from a decade low in March and faces a new dour outlook. New Zealand's Treasury Department released a suite of 5 possible scenarios for the future of the national economy on Tuesday. All of them forecast a deep contraction in the June quarter. What is clear is that whatever the path the global and domestic economies follow, the effect of this recession will be severe and long-lasting. That is only likely to heighten investors' nerves ahead of the start later on Tuesday as the dour U.S. earnings season begins with J.P. Morgan and Wells Fargo. And with that, we'll go on and move into the analysis. So the euro slightly pared back on Monday after challenging the resistance at 955. Support is going to be 880 as well. So the 955 is going to stay in place. There's a 955. We did challenge it, got just a little bit above that. We slipped back, and there's our 880 down here. No changes. This is going to remain the same. 955 on the resistance and 880 support remains the same as yesterday. We can see yesterday was actually, although this wasn't not unexpected, because if you look at Friday's close, it was a bit of a spinning top, almost. I mean, the body would have to be a little bit higher, but when you see a spinning top, generally means you kind of run out of momentum. And we did see that pair back here. We'll go on and move on to the cable. Now, cable continued to press higher to start the week. Upside challenge remains the same. It's 2602. That's what they're shooting for, and support will be 2351. So, although we're in a very tight range, and actually we saw the same thing really here from Friday, a spinning top, but we've kept the push still high, albeit in a rather tight range. It almost feels like it's just straight up short covering, but here's that key weekly level of 26.2 that I think that the market is determined to get to. You can see there the significance of 2602. And that will be our resistance. And we said 2351 on the downside. I think we'll have to obviously adjust that because we still remain on the bid here. So that's where support's going to come in. 2441, which comes in here at this low, meets here, 2441 for support. So the Aussie dollar, albeit in a tight range, closed above Friday's highs. Resistance is going to be 64.35. Well, so far today, the high has been 64.31. So once again, we've got resistance is going to be 64.35. With support at 63.12. And now, in order for this to now flip to bullish, I mean, I guess you could make the case. I mean, we've come so far back. I mean, this thing was really knocked down pretty good. I mean, obviously, like they said, a 17-year low. We pushed higher and got beyond this, but really, this is all from this last week and a bit of a, if you want to call it, for lack of a better word, a squeeze. 63.97 is key, and we're holding above that at least for now. But in order for this to change, we'd have to see at least two consecutive closes, at least two above 63.97. Let's go and move on to the Kiwi. So the Kiwi closed with back-to-back spinning tops. You can see that right here. Suggesting this respite may be warranted. Resistance will be 61.25. So far, the high has been 61.33. With support at 60.32. I would expect this market to kind of run out of gas. They pushed a little bit higher because of that Chinese data. We're still holding above them. We've had a decent move up in here. But like I said, two back-to-back spinning tops. We pressed it, and what pushed us even higher? Well, you'd probably have to say, well, because that Chinese data wasn't as bad as some people expected it could have been. So once again, I think we could probably start to see this market start to take a respite here. So resistance is going to be 61.25. So far, the high has been 61.33, and support at 60.32. Let's go and move in now to the dollar CAD. So the dollar CAD took a slide towards the end of the session. Support is going to be 38.06, which is a 50% of 29.50 to 46.62. Resistance will be 39.96. So we've seen a pretty good little pullback in here, kind of taking a bit of a respite here. As crude oil prices begin to slide, so a little bit of support here for dollar CAD. But once again, I think we'll make it down here to the 50%, which is going to be 38.06. With resistance at 39.96. Now the dollar peso opened lower, but had a mild rebound to complete a bullish engulfing candle. You saw that here on Friday. And so we opened lower in Sunday session and saw this engulf the prior candle. Not that the prior candle was that big. Once again, I always focus on the body. So bullish engulfing really opened the market to kind of like settle here, maybe get a little bit further short covering. Resistance will be 23.89. So far the high has been 23.70. This will be 23.89 with support at 23.26. And onto the dollar yen. The dollar yen remained on the defensive to start the week, pressing below support at 778. The pair has minor support at 748 with a potential move to 713. Resistance is going to be 820. So support's going to be here at 748. We do have the potential to move down to 713. We'll stick with this, as I said, the minor support at 748. And support resistance is going to be 820. And let's go move into the cash dollar index. So the dollar index took a stab lower, defending the support level of 99.02. You can see here. I mean, we got as low as coming up down here almost to 99.11, but we had our support previously for 98.902, which will remain support, with resistance will be 99.89. So once again, still rather tight range overall. You can see here we had 99.02 yesterday. Difference is going to be today's support will drop down to 99.89. And moving on to the cross rates, looking at the Kiwi Yen. We're kind of holding on. Once again, everything's trading in relatively tight ranges. You can see here we ran into a little bit of a spinning top on Thursday. We saw a little bit of follow through on Friday. I mean, actually on Monday, I apologize. So spinning top on Friday, a little bit of a pullback on Monday. We're just staying in a rather tight range at this point here. Looking for support. We had 65.29 that we were eyeing here. And that's going to still stay the same. We're going to keep the 65.29. And on the upside, it's going to be this body close right there, which is going to be 66.02. So the support remained the same, 65.29 with support of 66.02. Let's go and move into the Euro Yen. We saw a pretty good pullback here on Monday. Look at that. This close, I mean, this bar here ended up taking out Friday, Thursday, Wednesday, Tuesday. Holy smokes. Quite the sell-off here. You can see the touches right in here. That would be support, which actually is going to come in. Actually, if you drop it down to right here, try and see if we can't get the most here, which is actually going to play into the low from yesterday, which is, well, that's where they did find support, 1731. We'll go and use that with our bias chart support for today, 1731, and resistance is going to be right there, which is just above the session's highs, just a pair above it. So it's going to be 1796. So 1731 and 1796. For the Euro Yen today. and still retains that bearish outlook. Certainly going to see this thing on the defensive. We may in turn eventually make it down here, but a lot of support there at that 1704. But this was just, I mean, you can see here when the market got above this 1817, you can see these stabs up in here, but the body, the close comes down here, and same thing, a little bit here, same thing here, a big stab. We try and challenge the highs, look where we close again. Then once again, we get a spinning top, meaning the momentum is run out. But what's been the prevailing direction? You look here, higher, and then we see this big fall. We're going to move in now to the Euro Aussie. This one has finally made it into this key support level here. We've been talking about this probably since about maybe Wednesday, definitely no later than Thursday, about the potential for this market to move all the way down here. And certainly we appear to have finally made it here, which is 170. Well, actually going to come in at 70.10. So we finally reached that area. I think we should see the market hold. Doesn't mean we're necessarily going to snap back, but we should see it hold at this point and start to see if we can hold our own, maybe start to see a little bit of short covering come in as we've reached that key level. Pull this back. This is actually, you can see the significance of this level. And that's why I thought we were going to make it eventually to that level. See all the touches? So we did make it there. We're coming off of it a little bit. We're at 70.43. That's on a weekly chart. We're moving into the daily. Let's take a look on a 2-hour chart to get a better indication where we may go to. So there's going to be resistance right there. 70.89. We'll move into the Euro Kiwi. Pretty much the same picture that you've seen here with the Euro odd. We had the support level at 78.85. We've taken it out by just a bit. I look right here at this body here. You can see a little bit of touches coming across for confluence, and that comes in 78.31. And actually, we've just about made it and tagged that. I think that's at the far reaches here, and that's going to be 78.31. I think that's about as good as it gets. I mean, I wouldn't expect this to be able to push any further. We've already come off that quite a bit, 40 pips off the lows, or almost, so 30, maybe 30 some pips off the lows. And then for resistance, we're going to the 2-hour chart. Right there. See that body coming across? That's going to be, look at all the wicks it touches there. So all the confluence. It's going to be 79.49. 79.49 on the upside. And looking at the Aussie Yen, we pushed up a little bit higher on that better Chinese data, better in the sense that they thought it could have been worse, but you can see clearly where the resistance is. It's that body touch right there, which is going to be 69.40. I actually had it listed at 69.38. That's fine. We'll keep it at 69.38. The high for today so far is 69.23, I guess, maybe. That's going to still remain the same here. On the support, this market looked like it's a bit ready to run out of gas, but you can see here it does appear to be forming potentially a gravestone doji. Looking here on a 2-hour chart where we can go to. Right there, the middle of this little zone here. That takes us to 68.09. So that's going to be support, 68.09. Actually, Confluence is right there with that high. So it's going to be 68.09. And the market is rather stretched. With that, we can go and move into the guppy. And looking here with the guppy. Right there is going to be resistance. I think actually we've probably already seen it today, but if you were looking at where would be the risk level be, where stops would be right there, 35.45. And there's where support. Let's pull that down here. See, the most touches there is going to be right there. And a good target to 34.67 on a short-term basis. Now we'll take a look here finally with the sterling odd. Well, we have gone and tagged into this support level here, and I think we can finally start to see this odd pull back a bit. So that would have us right there for support. Actually, it'd be just below where we had today, right there. You see that coming across these touches here on the body? That would be 95.70, which is actually the low for the day, or almost the low for the day. Now, there we go. We had 95.71 from yesterday, so that held it so far in check. And then for resistance, I would start to expect this to, I'm surprised we haven't gained even further here. So immediate resistance, you can see this body touch coming across right here. Let's actually go right there, which would be 96.88. 96.88. So about another 50, 55 pips to go. And that's going to do it here for the currencies. We'll just take a quick look at the equities. We can see the market kind of holding on here right at VWAP. Still, we've had a very good run here in obviously this on the 2R, but you can see a little bit of a gray stunt edge here. But heck of a run we've had here in NAS. And you know, when you think about the move that we had from Sunday evening here, as we opened strongly on the back of the OPEC agreement and then quickly sold off. And the market just kept pushing further and further and further until we did go on in. We actually had come down here in these lows and bounced. And then the market came down to re-challenge them, took them out by a little bit. I thought the market was pretty well overdone at that point. Just on a short-term perspective, because you have to figure that it was just only on Friday we were up here at 2809, and I thought we'd get a bounce. Now, I didn't expect this kind of a bounce, but I thought that we potentially had the possibility to make it back up to around maybe 2760-ish, because remember how important the 2764 was. But then obviously we did see and really we never made it there in the U.S. session until very end of the day. We started punching up a little bit high. I mean, the very, very, very end of the session. And then, of course, in Asia, we got ourselves rolling and we're here. I just think we're kind of back and forth it a little bit maybe. And you can see crude oil continues to remain weaker. Look at this. Really just a reflection of what expected demand is. Once again, here's gold still remaining quite strong, but starting to be understandable because of all the liquidity that's been pushed right into the system. But you can see here, look how just really reflecting the weakness in demand despite the cuts. Here we are at $22. Well, that's what we have for today. We'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.